Friday, June 30th, 2023, Maneco 64, home of alternative economics and contrarian views. So today I've got Rafi Farber on instead of doing my usual monologue. And I thought it would be interesting to touch upon hyperinflation. And many of you who have been watching me for years know that I've been warning and talking about hyperinflation. I even have a hyperinflation files where I have over 40 videos. I've referenced these two books, especially about the symptoms of hyperinflation, how people go mad and crazy, and you see things that you've never seen in normal society. So I've been listening to Rafi's talk about this, especially in the last few videos that he's made, and I thought it would be good to have him on and also maybe talk about the markets later on, about silver and gold, what's going on. Rafi, thank you for coming on the channel. How are you?
Good. Thanks for having me on again, Mario. Good to see you.
Nice to see you too. So, Rafi, before we start, I give you the conch, so to speak. Just wanted to reference something crazy that went on in Germany, especially Bavaria, back in the hyperinflation of the 20s. It says here, the Bavarian government's gluttony bill, the previous autumn, had drawn in its preamble the nice distinction between habitual gluttony and occasional overindulgence on festive occasions. The men of business must have overlooked not only the haunts and troubles of the poor, just as he would probably have overlooked them at home in Britain. The plight of the pensioners and the rentier classes had escaped him altogether. So yeah, they had a gluttony bill because they thought people that ate too much were creating inflation. And we're seeing the same thing here. Of course, we haven't seen the gluttony bill, but a lot of other crazy things, like they're saying that supermarkets create inflation here in the UK. And so with that, I'll pass it on to you so you can talk about your feelings of what happens when the money goes bad.
So I think I was talking about this with Phil on the last, I did an interview with one of my subscribers, Phil Lowe, who had some pretty interesting insights on this. I mean, he gave the example of the reason that he doesn't buy a Lamborghini, even though he has the liquidity to, $70,000 on a car, whatever. He could do it. But then you have all this debt that you have to service, right? He has student loan debts or whatever debt he said he has. You got a mortgage, you got to pay it. So you can't afford to run low on your dollars when you have all this debt. So really it's the debt that is keeping people from spending every last dollar they have immediately. Right. So I mean, that's the nature of fiat system. Because there's no such thing as a completely fiat system. There is gold-backed money still, because there's still gold on the Federal Reserve's balance sheet, but the rest of the inflation is just the other side of the debt that they have. So it's the debt itself that keeps the populace from just giving up on the currency entirely, until such a point where the debt doesn't really matter anymore, because prices are already going up so fast that people just default on the debt and nobody cares. Because what's the difference if you're going to be paid back in worthless money? So once that there is a tipping point where the debt can no longer restrain hyperinflation, and everyone just goes out and buys Lamborghinis or whatever they're buying as soon as possible, and then you go down the chain until you get to a slice of bread, buy that as fast as possible, and at that point the dollar is dead. So we're not there yet, but we're looking for a time when we're looking for a time when the debt assets on the Fed's balance sheet start to default, right? So I think that's going to start with commercial-backed securities and go to mortgage-backed securities, and then the only thing of value that'll be left would be the gold and some of the treasuries, and then the last thing to default will be the treasuries themselves. But they might not even ever nominally default. They might just follow after mortgage-backed securities, and the Fed will just have worthless debt and some gold, and then the dollar will be about $50,000 an ounce.
Yeah, and on human action as well, von Mises says on page 428 about the cracker boom. He says, but then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs, the crack of boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. And I thought I mean, I've spoken about this many times. Like you said, we're not there yet. There will be a trigger. And there are some people out there. I was listening to David Hunter. I think he's he's a contrarian investor. He was on with Kitco. He sees a melt up in the stock market in the next few months, and then a complete collapse, and then the Fed coming in and printing another 20 trillion for its balance sheet. I'm not sure if people could wait that longer. I'm kind of tired of waiting. And I think the social and political symptoms and the economic symptoms are very similar to what happened in revolutionary France in the 1790s, and also in Germany and the Central Powers. We've got the politics is crazy. The social situation is crazy. We've got people here in the UK, young people, not just young people, but just stop oil disrupting people's lives. I saw one video of them in the middle of the street emptying milk bottles because they say we should all be vegans, and maybe you could explain how that works, how when they control this fiat currency, they can do crazy things, and how you feel right now that we're there almost.
Well, yeah, the level of insanity in society is definitely higher than I'm used to. But I think, you could say that every generation says that. My grandpa used to say these kids these days, it's like a trope. Every 2 generations, everybody realized the insanity of the previous generation. But I think it's different this time because we're talking about mutilating little kids and really just destroying the young generation intentionally, which seems to be the last straw of any sort of sanity. Even parents don't. I mean, if I were to take a poll, I don't know how many parents are completely against the mutilation of children, and how many are for it, and how many just like don't care and let kids do whatever they want. If they decide that they're a boy and they're a girl, or if they decide they're the opposite sex, then you have to listen to them, whatever their fantasies are, and just mutilate their body parts. So that I never thought we'd be there, but we're there, and I think that's a symptom of inflation too, because when you think about it, any system that inflationary money touches in a significant way, meaning anything that the government spends money on and puts money in there, it gets crazier and crazier. Whether it's the university system, public schools, what a military industrial complex, all these values, they drive people nuts. And then you have the military going woke also. Like what the hell is going on? It's like all of this corruption is like compacting into some sort of singularity where nothing makes sense anymore. So it's not necessarily that inflation drives people nuts by making them poor, but it drives them nuts by incentivizing crazy behavior. Because if you're let's say a university professor in a public university, and you're spouting all this weird nonsense, and then you get paid, well, you'll continue doing that. That's what's going to happen. So it drives people nuts. It drives the rich nuts, and it drives the poor nuts. The rich will be like having these frenetic parties. I think that was also in When Money Dies, in that book by Adam Ferguson, right? The rich, I think he noted that they were just like, they were having these crazy parties every night, and the poor were just like starving in the streets, and neither of them cared about the other. It was just like everyone was living in the moment, and that was it, which is exactly what we're doing. Like when a kid says, well, I'm a daughter says, well, I'm a boy now, or a son says, I'm a girl now, and everyone's just like, okay, sure, let's send you to the doctors. It's the same sort of insanity.
Yeah, and yeah, like you said, I think the people that can afford it, they switch off from what the crazy things, and they just focus on the now, and they say, this is too crazy. I want to live my life. And we're also seeing, for example, even the big institutions, like you said, they're pushing this stuff, which is crazy. I saw the BIS, its thumbnail for this month of June has been that symbol, that woke symbol. It's not even a rainbow, apparently, because it doesn't have all the colors of a rainbow. So it's just crazy what's going on. And just wanted to show you as well here this guy in the FT yesterday. He wrote that you know, inflation is trying to fight inflation is a little bit like austerity, and that we in a democracy we should inflate, basically, that the 2% target is too high. So that's another thing that's going on there.
You mean
And
too low? You mean wait, 2% is too low, you mean?
sorry, too low, yeah. And then that
Yeah.
would be too many. I'm sorry about that. Yeah, that there would be too many problems. So we're starting to see that. This is the story here about the you know, furious bystander hurls milk over just stop oil protests. But what you'll see as well in the video is that prior to him throwing the milk at them, they were just emptying just bottles of milk on the streets. So it's really, really mad. And I guess it goes to the fact that every half of a commercial transaction involves money. And if you corrupt and you dilute the value of the money, everything goes crazy, like you said.
Yeah. Yeah, that's the only way to really end this. I mean, I mentioned this on my last video. You know, Elon Musk bought Twitter and gives us a little island of semi-free speech, which is important and good, and I'm not complaining. But it's not going to fix anything. The only thing that's going to fix it is bringing money back into balance and stopping the theft. And that's going to make, it's not like everything will be okay after that. There's going to be a huge amount of pain by millions, if not billions of people. A lot of them are going to starve, and a lot of them are going to die. I mean, we're talking about, we have to live through the consequences of all of these decades of theft. It's not like you can just bypass them or pray to God and hopefully he'll save you. There's consequences for the human race about this, and it's inescapable. You can do what you can to try to insulate yourself against it, but no one's going to escape. Not even the wisest gold bug that times it perfectly.
Yeah, and I have been trying to, even before Silver Squeeze, and that's why I thought Wall Street Bets was interesting, because I'd been telling people that the only way to fight this system of fiat currency is to keep stacking and physical, because if you buy the paper version of gold and silver, the bankers control that. And at the time I thought, oh, if Wall Street Bets can do it, maybe we can do it in the precious metal space. And lo and behold, this Silver Squeeze movement started, and I think it's kind of fizzled away a little bit, but it's still there. And I think it's a good thing that we have people like you and me and others talking about this, because 6-7 years ago when I started my channel, I was quite lonely out there. And even before that, back in 2002, when I started buying some gold, and I read that speech by Bernanke about he mentioned the helicopter money. He said that the United States government has this technology that is almost free, that we can just print and stop deflation, you know. So I've been, yeah, it's been a long-term patience, but and it's not even a forecast. It's just like seeing that bad behavior results in bad results. And you know, so yeah. So yeah, explain to people how, because some people don't understand. They think that inflation is caused by higher prices. They don't understand that it's theft. So maybe you could talk your analogy of the fruit tree in the back garden. And I also like the analogy of your guest the other day about the
The
carousel.
casino. The casino
The
or the carousel
casino.
or the kids riding around
Maybe
the
you could
carousel.
talk about both of them and your fruit analogy so people understand what inflation really is.
Right. Well, just before you go into the fruit analogy, just logically, right? There is a certain amount of stuff in the world, goods and services that exist right now in any given time, right? And there's also a certain amount of receipts to acquire these things. So if you're able to just invent those receipts and then claim stuff that exists, you're putting more receipts into the system and taking out stuff, which means the prices of the rest of the stuff is going to go up for everybody else. So that's just a way of saying stealing. Right? If you're going to invent receipts for things that exist and then take those things that exist, you may as well just take the things that exist without the receipts. What's the point of the damn receipts? Right?
Yeah.
So you could say, okay, maybe it costs a penny to make a piece of paper, but it costs nothing to push a button on a computer and then expand the amount of receipts. So yeah, it is theft. It's literally theft. And while you can have a society that has theft in it, that is controlled externally and punished, and the theft will damage the society, but if you can keep it under control, you can have a functional society with criminals in it. But a society that is based on the principle of theft will not survive. It will steal itself to death. And that's what a system of inflation is. The system of inflation, right? The debt, the Federal Reserve buying debt and then issuing money, and money and debt being opposite sides of matter and antimatter. That means that they do have to annihilate in the end. And when they annihilate, that is hyperinflation. So there's no escape from this annihilation. If you want to go into the fruit tree analogy, if you have trees in your backyard and they're making fruit and they're making so much fruit that your neighbor can just like pick off a few oranges or figs or whatever without you realizing it, then he gets some stuff and you don't realize it, and you keep feeding your tree and watering your tree and pruning it and taking care of it. But if he steals too much fruit and you realize that he's doing it and you can't stop him, then you'll stop taking care of the tree, and you'll pick as much as you can even before they're ripe, and you might even try to harm it to try to get him to stop. So you'll destroy your own capital, and that's what hyperinflation is. It's the self-destruct button on the ship that is being taken over. It is the proverbial ejection of the warp core that I've been talking about, and that's where we will get to.
Yeah, and the carousel analogy. Do you want to go over that one?
What was the carousel?
Well, I think Phil Lowe, he was talking about how to stop the inflation. You could either take a gold bar and stop the carousel, and then the kids would fall off and the mums would have a go at you. But if you don't stop it, it will eventually the centrifugal force will just
well, the kids will fly off anyway.
Yeah, and get hurt even more. But I guess flying off is the hyperinflation part, because I don't think the powers that be are going to use a gold bar to stop the inflation. So
the powers that be won't, but the people will.
Yeah, the people
without even realizing that they're doing it.
Yeah.
The analogy of a carousel is also pretty apt for the times that we're living in, because compared to 10, 20, 30 years ago, we're just constantly distracted. Pings and tweets and this and that. Like you can't just like sit down and just like read a book without something happening, or Russia, some kind of coup in Russia, this, that. Nobody knows anymore what's going to happen the next day. We're on a crazy carousel, and crazy things happen every day now. And we're like, oh yeah, well, it's 2023. What do you expect? Well, eventually we're gonna fly off this thing, and then hopefully we'll
I remember the other day I joked because I was out in the garden playing with the dog, and then I came back in, and the coup in Russia had stopped, and I said, "Wow, that was quick!" It's crazy. While I was playing golf with Rudy in the garden, the coup in Russia ended. So, but yeah, like you said, I think they're gonna probably blame us silver bugs and gold bugs and sound money people for the crisis once it hits, which is crazy, but that's usually what they do. And that's why I've been telling people to buy physical. Well, I haven't been telling them to do it, but I've been telling them that's what I do. And if they want to, if they do their research, to do so, because And like you said, it's not going to save you. It's going to be really rough out there, but it will give you a better chance of survival, I think. And maybe with that, we could move into the paper market, which I know eventually will uh, uh, go the way of the dodo bird, but is still really important. And you spoke about this, I think it was yesterday here, about open interest in silver, and you said that you think the trend change is imminent. I've seen some people talk about the seasonality of gold and silver, that usually in July it's a bullish month seasonally, so maybe we are. And yesterday we saw gold get hit quite hard below 1900, and I was surprised that it rebounded later on and
Oh,
went
it broke 1900. I didn't even notice.
yeah, we went to 1892, and then it rebounded all the way up to 1910 out of nowhere, which I thought was interesting. And we had strong U.S. economic data. The other thing that's really funny that I hear now people talking about, especially in the mainstream media like FT and others, is that there's such thing as Bidenomics, that Biden is changing. You know, a guy who can't string a sentence together, a guy who said that Putin is winning the war losing the war in Iraq, has an economic.
He said Putin is losing the war in Iraq.
Yeah, I mean, it's crazy. So that's the guy who's come up with Bidenomics. But anyway, maybe you could talk a little bit here about this, what's happening in silver.
So yeah, I've been saying this in the Endgame Investor for a while, that open interest, the amount of contracts open in the silver futures market, was a little bit high. I think last week it was like 150,000, and you can see in the middle section here of this chart, right? This is the open interest. It was like near an all-time high before post 1980. 1980 was a different story. But in 2020, it was like an all-time high since 1980, and then the March crash here. This is the lockdown fiasco, and it's been trending down ever since. Except in the last few months, it kind of jumped up a little bit again, but now we're down to about where that black line is. It just cleared out from about 154,000 or something like that to now it's at 117,000. So all these contracts just cleared out, what was happening was that the active contract, the July contract, was getting closer to delivery. And usually what happens is that people who are along the paper who don't want the war and who don't want the silver, they roll over to the next active contract. But this time they weren't doing that. They were just closing out the July contract, and then the shorts were covering it. And then they weren't opening new contracts. So we were down to about 117,000 now, which is about a 10-year low in open interest, which gives us a lot of room to start moving up again when the next trend change happens. It doesn't mean that it's going to be today or tomorrow specifically, but it probably does mean that once the trend changes, there's going to be a lot of room for a lot of upside.
Yeah, and the other thing as well, if you look at from like 2020 till now, it's been like it's been choppy, but the trend is down, which tells me that the price action we've seen since then, since we hit 30, is basically a consolidation. Because if it was the start of a new bear market, open interest wouldn't have been dropping as much. It probably would have been going up. So I think that's the other thing that's going on there.
Mm-hmm. And I think this was the fastest fall in open interest, I think, since 1980. I don't know that for sure, because I don't have the daily data, but 20%, now it's like 23% of all contracts, almost a quarter of all contracts closed in the last 5 business days. That's pretty extreme.
Yeah, I think the other thing is that maybe people are starting to get involved in physical, real silver, not contracts, or maybe a lot of the business is migrating to China. We're seeing a lot of activity in the Shanghai futures and commodities exchange in silver as well. I don't know. I mean, it could be anything, but like you said, lower open interest means that there's more room on the upside. So Bank of America, they also lost a lot of money, I guess, in the first quarter.
Yeah,
Yeah.
that's the same problem that the regional banks had with the falling
Yeah.
bond prices.
Yeah. And I just wanted to show you yesterday, I had a look at the Fed's balance sheet. And don't forget, I think it was Ron Paul. He was uh, during the testimony in Congress. I think it was around 2009 or around here. He asked Ben Bernanke, "Wouldn't this be inflationary? All the QE?" And Bernanke said, "No. The 1 trillion that we printed, we'll just get rid of that, and we'll go back to where the balance sheet was before the crisis." That's what Bernanke said, and here we are, and we're almost at 9 trillion. But one thing I wanted to show you is that uh, we're only back to where we were in March. So the Fed has wasted 4 months to do real QT. Net, there hasn't been any QT because we're 83.40. And on the 1st of March, we're 83.39. So the balance sheet is actually expanded in the last 4 months.
Mhm. Yeah, I was actually started to write about this morning. So yeah, I don't know how much further we can go on the balance sheet here before we reach the next financial crisis. I guess we'll see. It can't be that long.
No, and what's your feeling about what this guy? I watched this interview. Someone, one of my viewers sent it. He did an interview with Kitco, Dave Hunter, and he said, it doesn't mean I'm going to be right, but we see a melt up in the stock market in the next few months? And even if we do, though, he sees a complete collapse afterwards. So I would tell people not to worry about the stock market and keep stacking. What's your view on that?
Yeah, I would just ignore it. That's what I do. I mean, I check to see what's going on every now and then, but I really don't care which way stocks are going because
Yeah.
I don't trust it. Well, I can't even figure out how to analyze it monetarily anymore because there's all these wild cards that could change anything like any day. Usually when first of all, when before the 2020 insanity, when money supply started to fall and the rate of money supply growth started to fall, I would leave my stock positions or lighten them, and then when it started to grow again or pick up, I would increase. That's what I would do. But like, there's no way to use money supply growth anymore to figure out what the stock market is going to do because there's such an overhang with the amount of money that was printed in 2020 that even though money supply has been falling for like a year now, we're still way above where we would have been had we never done the 2020 printing in the first place. So is there extra? Is there not extra? And what happens with all these reverse repos that are outside the banking system? They're starting to go in now. Do those go back into the banking system, or when the Treasury spends that money, does it go right back into reverse repos or right back into the Treasury market? Like, there's so much going on now that saying, oh, the stock market is going to go up or the stock market is going to go down is just really it's a shot in the dark at this point. All I know is that from here, gold should continue to trend upwards until it just goes vertical.
Yeah, and it's not really gold going up, like you said as well. It's more like the dollar and all the other currencies just losing complete, losing their value.
Yeah.
Just wanted to show you here because I think the UK a lot of times, precedes crises for some reason in the US. And we see today here the 2-year gilt yield is continuing to go up. It's almost at 540 now, 5.36. And we had
can you explain? Sorry, can you explain what is so special about the 2-year? I know it's linked to the UK mortgage market somehow. I just don't understand it.
Well, I follow it because, like you said, the UK mortgages, most people take 2 or 5 year fixed mortgages, even though the mortgage deal can be for 30 years for the principal. For the interest, they fix it for 2 to 5 years. So the 2-year gilt yield is used as a reference for what the mortgage brokers and the lenders use.
So you're saying if somebody buys a house and their first 2 to 5 years of mortgages of mortgage payments is at the interest rate of the benchmark 2-year, And then
Yeah,
at the end of that, it
they go
resets to
again.
whatever it is.
Yeah,
Okay.
and then it can go variable, or they can get another deal and fix it for another 2 or 5. So it's a really important rate to look at. And I mean, a few weeks ago, I was warning about this. We were around 440, so that's moving quite a bit. And I noticed yesterday as well that U.S. Treasury yields went up a lot. Like the 10-year was at 375. And then we had some strong, I think jobless claims was a little lower than expected. And people just sold bonds on the back of that. So you see, we're now at 389. That seems to be picking up as well. And the 2-year as well was at 475 yesterday. Now it's at 491. I personally think that the bull market in bonds from 1981 is over, and we're now going to see continued rising rates. But some people seem to think like that David Hunter, he sees a melt up, and then he sees a collapse of everything, and then he sees the Fed coming in and driving yields back down to 1 or 0, which even if they did that, then the gold and silver would go through to the moon, I would say.
Yeah. You know who also disagrees with the bond market being bond bull market being over is, and in his opinion, I take more seriously than David Hunter, because I don't know what his principles are.
Yeah.
But Keith Weiner is a much clearer thinker, and he has certain principles and a certain systematic way of thinking that I don't agree with all of his paths, but I can tell he has an ordered mind. And he thinks that the bond bull market is not over, that we're just in some kind of hiccup now. But he might be right in the sense that, yeah, there's going to be one more time where the Fed forces all the rates down to 0 again. Yeah, that might be true. But then you could say that the bond bull market is still real, but in a sense it's not, because bonds won't exist anymore once they do that.
Yeah, not in real terms, because you look at the country that hasn't allowed there to be a bear market in bonds is Japan. And if you look at the price of gold in Japanese yen, here it is, it's almost at an all-time high. So yeah, Keith Weiner might be right about the bond bull market not being over. But I've looked at the cycles, the bond yields bottomed in 1941 in the US. Beginning of World War II for the US, and then it topped in 1981, so that was 40 years, and 40 years from 1981 is 2021. And that's when yields started going up. But like you said, the central banks, they've gone mad. And that's the last question I wanted to ask you. I don't want to keep you too long. Is why do you think like the mainstream economists and publications don't see what we see? I saw that your friend, your subscriber Phil Lowe, has a master's in economics from George Mason University, and it's funny because yesterday I did a video about a guy that wrote for Bloomberg who said that gold is a boring commodity and it doesn't work anymore. And he is a professor at George Mason University. So is this part of the madness that fiat currency brings, that even people who are supposed to know better don't?
Well, look, there's madness in everything, and there is willful blindness. It's a real thing. And I try to on medical topics and stuff, I try to show my friends, like, don't you see, like, the data it's right in front of you, like, look. And they're like, well, that's not what the experts say, so you must be wrong, right? It's a religion. That's what it is. Like a religion is when it doesn't matter what proofs you have or what evidence you have, a certain set of beliefs, and you just go with it. Whatever is proven or disproven is totally irrelevant. It means that in the human mind is a capacity to just go after a certain set of beliefs, and then just, no matter what happens, just keep going. Why we have that evolutionarily? Probably because it keeps society more ordered, and it's a useful trait when things are making sense. but when they're not, it's very dangerous. You know, you have these species of these mice that just like jump over cliffs if the leader just goes, and then everyone just like all the mice just like jump over the cliff with them. Lemmings are they're called lemmings or something, right?
Yeah.
I mean, this exists in nature, and it exists in apes, and we're just a bunch of hairless apes with big brains. So we turn it off, and then but you can't have all of humanity jumping off the cliff at the same time. You got to have some individuals that say, "Look, guys, that's a cliff over there. You don't want to go there." And they're like, "What are you talking about? Everyone's going." So like let them jump off. Let them
Yeah.
jump off. It's painful, but like we know what our job is. We'll just we'll either let them jump off. We'll keep calling out. Maybe we'll get one or two here or there to join us, and we'll be here rebuilding society when everyone else is gone. I hope.
Yeah, me too. Rafi, thank you again, and I wish you a good Sabbath.
Thank you. Have a good weekend.
Thank you.